How's it going today? Today we're going to talk about how to actually buy stocks, how to get invested in the stock market, what do you need to know, what do you don't need to know, and the misconceptions and everything. We're just going to get right into it. Make sure you like and subscribe on my channel. On my YouTube channel, I talk about how to, what stocks to buy, how to buy them. I talk about more advanced things, but I'm going to set it back for the beginners and for people that don't know how to buy stocks and everything. And basically that's what my channel is about, I pick these stocks and hopefully we can beat the market. That's kind of the goal. That's what I pick free stocks every month. I have like special videos, special reports, or whatever you want to call them. I do it for fun. But anyway, and it's kind of a smaller community, so I hopefully I can do, get back to you guys. If you write anything, I try to get back. I talk a lot about market psychology, understanding the market, and just kind of miscellaneous type stuff that I've learned over the years. I started back when I was 18 years old. I was basically out of high school. And I was like, well, I didn't get a job and this and that. So I was like, well, I'm going to buy stocks and stuff. I had a little money saved up. And I was like, well, fuck it. What else I got to lose, For me, that was my mentality. A lot of people. But anyway, how to actually buy stocks. And what I learned over the years. Basically, what do you need? Well, first, what are stocks? That's a lot of people, they need to understand, what is stock? What does it mean? Like, I bought a stock of Walmart. What does that actually mean? What is a stock? Well, it's a part of ownership of the company. And the way it works is, let's say, well, you go on Shark Tank, or let's say you're a business owner. You have this great idea, but what do you don't have? You don't have capital. You don't have money, basically money to start. Let's say you want to start a restaurant and you need $1 million to start it. You can go to the bank and go, well, I'll give you, a bank. But the problem with going to the bank is you have to take a loan with share, or you can sell part of the business. Be like, I want 10% of the company. And that could be basically stock. That's basically, it's the equity of the business. You basically are an ownership of the business. You own percentage of the business. That's why I would say, well, I don't buy stock. I buy businesses. I buy, because that's how I view it, especially if you're long-term. And that's kind of what my philosophy is, long-term investing. That's what it is. I buy not GameStop, but I buy Activision, Blizzard, you know what I mean? Or let's say, oh, you could buy GameStop, the stock, but you treat it as, I'm buying this company. What is the payout? What is my return? What is the cash flow? What is the debt that I'm taking on? I'm buying a percentage of the business, and that's all it is. It's not some other fancy piece of paper that people get. You own a percentage of the company. So the company, it just goes on valuation. That's what market cap is. Let's say the business is worth $100 billion. Well, that's the market cap. That's if you bought all the shares outstanding and you bought the 100% of the company. It's a $10 billion company, So let's say, and that's basically what it is. That's what stocks are, in the basic, that's what they are. They're ownership of the business. And you get voting rights and stuff, but, when you get larger, and that's how you get in the board of directors, they speak for the shareholders. They're normally what happens is large firms like Vanguard and stuff, and then they elect people to be on the board and speak for shareholders because they own shareholders and they elect CEOs and stuff. As a small-time retail investor, you don't really have to worry about that, but that's how it kind of works. That's the investment world. That is, you're basically the finance department. You can finance it through stock offering. Ownership of the business is like, well, I give you 100% gain or 100,000 for 10% of your company. So basically what I'm saying is that company is worth $1 million and I'm buying 10% of it. And I'm going to get 10% of the sales. I'm going to get 10% of the returns. And what we call that is dividends. The earnings gets back in basically it hits the bottom line and the company reallocates it through buybacks, through dividends, and through, well, just reinvesting in the company. Let's say they buy in your little restaurant business, you buy a new washer, or you hire more employees, or you can take that money and pay yourself, and maybe that's dividends and stuff, or you can buy back some of the companies if you issue stocks and everything like that. So that's what stocks are. That's the simplest thing that I can explain it to you guys. So that's basically what it is. And now, how to buy stocks. How to, buy stocks. Well, you have to open up a brokerage. on my channel, I always recommended Robinhood and TD Ameritrade. Them are the ones I personally use. I don't use Webull and all those, so I can't speak on those. I heard great things about them. I heard some not great things about them. But the TD Ameritrade's probably the standard in investing and the standard in kind of the retail investor space. You know, they have everything you can need to do, all the things you shouldn't do. So you can get margin, you can get loans, and you can get more complicated derivatives and fixed incomes and all these account things. I wouldn't mess with Acorns, and I don't like Acorns and all those other apps where you can't, I think Cash App is a little different. I haven't used it, but at first part, I was like, I don't really like Cash App a whole lot, but I use Robinhood for the simplistic. It's very simpler. So for me, I use mostly TD Ameritrade. I have Robinhood. Obviously, I opened it because back in the day when I first started, it was commissions, and that's why I switched. I was like, I could try this new commission-free app because Robinhood was the first, and now all the other ones. So now it doesn't really matter. So in my opinion, if I was opening an account, maybe TD Ameritrade and just call it even, because I think TD Ameritrade is a little more complex, but you can do a little more things with it as you get better. But if you just want to buy a stock, and then Robinhood. But if you want to get a little more serious with it, and you can do everything, like basically your own investment type portfolio, you can buy all the derivatives, you can short, you can take loans. With Robinhood, you can do that too. But if you want to get more advanced, TD Ameritrade is where to go. If you want simplistic, I would recommend Robinhood and everything. So basically, you go on there and you put money in there. It's just like a bank account. It's just like open up your bank account. Before, and that's how you buy stocks. It's just straight up like a bank account. You could have, on your TD Ameritrade, and your taxes are all through that. So what I do is I make a separate email address for that, and sign up so you can get all your emails and you keep it nice and organized, because as you get more money and more things going on and you get emails every single time, and keep it organized. And your TD Ameritrade, they go send you stuff like an email through TurboTax. And that's how I do all my taxes and everything like that. And I never have anything, and I'm still sitting out here, and the IRS is not kicking down my door yet. But anyway, so that's what it is. Now, it's pretty simple. A lot of people, I think it's so complicated. Oh man, you have to be licensed. No, you don't have to be licensed. You can legitimately, I think, start investing with like $100 but anyway, I'm going to jump. That's how you buy it. That's what stocks are. Their ownership of a business. You buy stock, but how do you know when you're ready to buy it? Financially, this is when you get kind of personal, because this is going to get in the personal finance section, which the industry standard or the personal finance will tell you need $1,000 plus 6 months of expenses saved up. So why is that? Because let's say you lose your job, let's say your expenses is $1,000, because let's say this. So you need $6,000 plus $7,000, and then anything extra, that's what you invest with. Because now you can, I don't know your personal finance, and that's why it varies. That's what the industry standard is 6 months plus $1,000. I use the plus $1,000 because that's your emergency fund, and the other $6,000 if you lose your job emergency fund. The first $1,000 if my car breaks down. Normally that's how it would cost to get you a new car, get it fixed, and everything like that. You can work out your finances. I'm not a financial advisor. I just pick stocks and talk about the stock market. I'm not a financial advisor. You can sit down with maybe a professional financial advisor if you want more stuff with that. I just kind of wing it. You know what I mean? I just save up that 6 months and do that. And that's what I do. And everything that's over that, well, I just throw it in the market. If it's $5 at the end of the month, I throw that in. If it's $50 or $100 or $1,000, I just throw it in the market, and that's it. Or I sit it in my brokerage ready to invest. So that's kind of how it is, So yeah, because why is that? Why not put all of it? Because the market does crash, and you're basically reducing your risk, because if you put all your money in there, well, let's say, your car breaks down, but then you're down 10% the same day, you're going to the mechanic. So you have to sell all your stock to pay that, And then, well, you're selling at a loss, and then by the time you save up the money, the stock is already down, and you took a 10% loss on your money, and you're basically, you didn't have to, because the stock market is volatile. It goes up, it goes down, and you don't want to be losing your job, and the stock market normally crashes because recessions and the stock market crashes normally happen at the same time. You know what I mean? Like at the COVID, COVID hit, and the stock market crashed 30%. So you lost, let's say you had $10,000, then you're down to like what, 7,000, and then you sell it because you lost your job or whatever happened. Things happen in life, and then you have to sell those stocks at a loss. But by the time you saved up money and got another job, the stocks were at an all-time high, and you could have made it all back. So, and then plus some. So that's why, that's what it is, for finance. But if you have all that, then you can start investing. You open up a brokerage account, and I can leave some stock tips down in there to get you started. I can have a beginner portfolio where you can, it's just basically free, ETFs, or basically these funds that you can buy. And I will talk more about that in that video. And then I go leave some stock portfolio where I have the 10 best growth stocks that I think over the next bull market we will do good. It's called the 10 stocks for the next bull market, and these stocks are up hundreds of percentages by now. But it's been good times for the market for the most part. I mean, I don't know how long it lasts, and I could talk more about that the market volatility does happen, So basically, that's how you buy stocks. That's how you get invested, for the long term. I mean, I don't really talk about trading on my account on this YouTube channel. I don't really invest like that. I think maybe one of these days I might bring in that, but I think it's more involved. I can't be here making videos every single 5 seconds doing that. And that's something you have to kind of do on your own, and I kind of learned on my own with that. But I do like the stock community the way it is, and that's kind of how I view it. I do the long-term growth strategy. That's why I talk them in this channel. I mean, we can talk maybe more complex things maybe down the road, options and stuff, if you guys want it. Leave a comment of what you guys are looking at, what you guys want me to make a video next, and everything. And thank you. And make sure to like and subscribe and share it with your friends if they want to know. Hopefully I made it more understandable for you guys out there. And if not, leave a comment and say, hey, I don't fully understand this, or hey, what is your advice on this? I don't really give personal financial advice, like should I quit my job and stuff like that. I don't do that. I mean, that's stuff you guys have to figure out on your own. I'm not a personal financial advisor. I just a guy that picks stocks, and that's how you get involved with it. And hopefully that video helped you. I mean, hopefully you understand it more and everything like that. And thank you for watching. Thank you.